Hey traders, this is Shagun Chat 247. I train traders how to trade in harmony with the market. Today is the 28th of October 2024. We are looking at the Canadian dollar Japanese yen. My analysis is starting from the 1 hour chart. We want to sell, go 4 seconds before the close of the candle, and we're going to take a short here. Okay, and I'm going to explain that in a minute. But before we do that, I just want to analyze this chart quickly. So this is the last low, and we've seen 0, 1, 2, 3, 4, 5. Okay, so we have a couple of structures here. Okay, those are the minor ones. So I'm doing this because this is very important, and as we go into the week, we can adjust a couple of things, but this should stay. This is a major momentum high. They bought it, price came below it, they give us this 4, and they bought again. So if this trend is going to continue higher, we probably need to see a break of this structure 4 here. So going to 5-minute chart, all right. What we saw this morning, that was the momentum high that I was referring to. Then we now have a internal momentum high. It was actually a strong turning point on the 5-minute chart because that is the high of Friday, and that is the momentum high. We have a structure here. I'm just going to highlight this price point using, we reduce the size. I'm going to use dash line so I can label it. Okay, and that's the 1 daily high, and that's 1 daily high, momentum high. Then we have a structure, and we have a momentum low, which is also 1 hour structural point, and it's also 1 daily low because that's the low of Friday. So I don't want to overload this line, but I have to label it as well with that. So I'll put this label at the top. So that's momentum low, 1 daily low. These are key turning points, and they're going to help us with our decision making uh, when we're trading. Okay, but something happened here. We have a structure here. We have a small structure on the 5-minute chart. So price traded and made a new momentum high. We don't need to draw all these ones because we are trading below. Then we had a structure, a momentum low on the 5-minute chart, internal waves. So we have 0, 1, 2, followed by 3 because there's no structures here, 3. Then we have a structure here, 4, and we're expecting 5. The idea that we are trading is called the price behavior, and the reason we call it price behavior is because price is the perception of traders, and traders will behave, or human beings will behave the same way over and over again based on these facts, okay, and these truths. We can study the price in line we are studying the people, because the price does not move itself. Price is the perception of traders. So if the traders feel the price is too low, they will buy. If they feel the price is too high, they're going to sell. Right here became too high. they broke the structure. The people that are making money here came out. Now they are selling. Where will these people that are making money, which they are sellers, where are they going to come out? Okay, because price has given us a structure here, this is where they're going to come out. Okay, so we can put a green arrow at the top there. That is where the sellers are going to say no more, because we are now having internal lower low, and actually that becomes our stop loss. Can give it some room. Okay, that becomes our stop loss because we are selling. Basically, we are not predicting anything. We're just trading in line with what the price, the information the price is giving us. The sellers are winning. We've identified before. We add, this should be our stop loss. Okay, why is the arrow not showing? Okay, there we go. Before, that will be our stop loss because that's the last structure. But now, as price has progressed nicely, here is now our stop loss above here, because that is the structural point. If the price should trade above the structure, the people that are making money here are going to come out of the market. Okay, therefore, if we are selling, because the people that are making money are selling and the price has not given us any contrary information, we have not seen anything that tells us to close, or that tells us that buyers are now the ones making money. We want to follow the people that can move the market, which are the dynamic traders, the banks, all those people that move the market. We as retail traders, even though some retail traders are trading with large sum of money, but it is not it's not going to make any dent or move the market in the forex uh, market, basically. So we have a sell. Can be constituted as a continuation break there. Okay, that's why we are selling. The risk is very small, 8 pips. And in terms of target, we have an internal lower high here. We can draw the Fibonacci first using the key ratio. We draw the low to the high. The pullback has been satisfied. Price traded into the sell zone using the minimum retracement. Okay, this whole area is your sell zone here. Okay, but price entered into the minimum retracement, which is good. Then they broke down. So that is the first thing. If I want to add another layer, I can use the extension wave. So what I'm using the extension wave for is to look for a confluence in the Fibonacci levels. Okay, remember we still have our key levels, but we're looking for something else that gives us more confirmation. So we have, where's the key level? The next key level is this here, this 5-minute structure. You can see there's no Fibonacci around it. So I will not consider this as a turning point. Then we come to the momentum low, which is one daily low, and it is also the structural point of the 1 hour chart. Okay, and that is the point where I said if there's going to be any retracement, if there's going to be any sort of continuation setup in the Canadian dollar Japanese yen on the 1 hour chart, this price is the price that needs to break. Okay, that will form an anchor. Then they can start buying again. Even if they are not going to buy it, that price, because we have another structure below it, this one here, which is 107.99, this price can still be a failure price that breaks and they attempt to buy, but that buying now created a new lower momentum high. So this is a very significant point, and as you can see, we have a confluence with the key ratio and we have a confluence with the extension wave. So This is a good level. It doesn't mean it's going to happen, but at least we have an area where there's a possibility for price to bounce and for this trade to be closed, because in our wave count, okay, this counting the internal waves, this is what we have: 0, 1, we have 2 here, this is 3, this 2 is an extended wave, okay, and we are not expecting another extension, so this has to be a swing move, one straight move, and we'll close the trade. Okay, so basically that's what we have, and based on this Fibonacci information, we have another strong level here. See, look at this: 138, 1.382 Fibonacci extension level is corresponding with the strong line of the key ratio 108.98. That is another area there. Okay, and that will mean they've broken the structure, they followed through after breaking the structure, hitting a strong Fibonacci level. We have another one here. So what I'm going to do, I'm going to just highlight all these levels. Okay, it's a good exercise to do. I've spent a long time on this video. That's actually very strong line. It's just sitting right on top of each other. Then we have, it's not too bad. It's here as well. But the best ones are the ones that we have a key price point around them. Okay, maybe this one was the second structural point, and that will be participation if they get to this point here. Okay, so that's basically the starting point of our New York session trade today, using the price behavior method, the wave of success methodology by Chart 247 Trading Academy. My name is Shogun Chart 247, and if you like what you're seeing, this is what we do, this is how we take our trades. I like to execute my trades on the 5 minute chart because there's a top down um, work flow that we do. We don't just look at the 5 minute chart, we look at the bigger time frame, count the waves on the bigger time frame, and try to trade in the direction of the tide, basically, because if there's a change on the bigger time frame using the key levels, we can clearly see where the flow of money is, and that is the direction we want to take. And another good thing about the method that we trade is because we do not predict the market, we let the market tell us what is happening, then we can follow the direction that the money is flowing. Okay, if you like what you see, give us a thumbs up, and I'll see you in the next video. God bless.